That's me. Norgen, we are a Stockholm-based impact tech investor, and the angle at which we come to this impact space is that we were started by one of the founders of Klarna. So really in our roots, we are tech people, we're entrepreneurs who want to make a world a better place. So we got our heads together and thought, how do we make world a better place? And in the end of the day, you should stick to what you know, and what we know is tech and entrepreneurship, but we have decided to apply those skills in the impact space. So today, our mission is to find the first impact unicorn. And what do we mean by impact unicorn? It's not a company that's valued at $1 billion. It's a company that affects lives of 1 billion people.
That sounds pretty good to me. So, Suzanne?
Yeah, I'm Susanne Pedersen. I'm from the largest climate knowledge innovation community in Europe. And one of the things that we are doing is to scout for and help climate relevant or clean tech accelerators. So we are currently running the largest clean tech accelerator in Europe, with more than 1,000 startups that we have supported in this area.
Great. Yeah, Anna?
Cool. I could use my neighbor's words here and say that I wanna be the first impact unicorn. So my name is Annu. I'm running a company called the Upright Project. We are basically crazy nerds for building this pretty outrageous quantification model that tries to build a new way of quantifying the net impact of companies. So our mission is to incentivize companies to optimize their net impact. And we're playing around with loads of data and some nice companies to make this happen.
Okay. Yeah, and the last...
I was so happy that we were just not right after the rap. Okay, my name is Hanna Kaskela and I work for Finnish pension fund Varma, and there I cover sustainability equity portfolio. And within that, we invest in sustainable equities in developed markets. And that's actually kind of going in line with our climate change policy. And within that, we have stated that it's not very good idea to actually put money like into Indian coal mines, for example.
Yeah. Here.
So these are all
just
our
as
pension
a
monies,
side
basically.
comment, can I just comment that when you said something about the rap performance and you were happy that we're not after it, just in terms of building the brand of the Upright Project, I want to say that Erica, the rapper, is on my team. So yeah, we already won.
There you go. Well, and who are you, mate?
Well, I think you all know who I am by now, the CEO of Loudspring, so I won't say much more than that.
Let's dive into it then. So who has the microphone now? Oh, look, everyone's put it down. Okay, great. Well, I'll start with Anu. So with the Upright Project, you talk about a lot about businesses needing a purpose, but in order to win market share. What about businesses that are doing well anyway? Why should they bother?
So first I need to educate you about your claim that we want every company to have a purpose. We actually are not about purpose, we're about net impact and quantifying it. So we're really into what companies actually do and quantifying the impact of the core business, rather than looking at a purpose statement that can be glued above a company. So we're almost like a little bit worried about the sort of purpose craze, where you might just, let's say you're making plastic forks, then you come up with a purpose statement that says that we bring families together, which sounds really nice, but it doesn't really change anything about what you actually do. So that's why we're building this almost like a fiercely nerdy type of quantification model, where we just look at your main product and service, the core business that you do, and the actual scientifically proven impact of what that product has on the world. So we look less about the terms about responsibility and the way of doing things, and more about what you actually do. So that's our little provoking conversation piece to the impact scene.
Excellent. I've just been educated on stage.
You asked for it.
Yeah, I did. Well, let's move across to Hannah, because with Varma, there's a lot of analysis going on with your responsible investing portfolio and things of that nature. The 2-degree limits are usually stated a lot with Varma and what their goals are. How do you react to what Anna is working on here? Is that something that's going to really benefit the work for these larger pension funds to analyse and see what's happening?
From investors' point of view, it's always much nicer to have like figures and measurements and nice statistics than glossy papers which states that, oh, it's all good and this is how it will be. So kind of integrate it in the businesses and the business plans. So in a sense, good idea.
I have a follow-up question for you. So let's just, because these are all our pension money in a way that or a lot of the pension money. How much actually of this money goes to these sustainability-oriented investments?
Basically, if we think about the whole portfolio, every asset classes, so it's in some way integrated in every asset classes. But there is a kind of this responsible investment universe, so it depends whether you are a debt investor or equity investor. Then there is a difference whether that's listed or like unlisted, and then there is a difference whether that's like outsourced or in-house. So if it's like in-house equity listed or private equity, it doesn't actually matter then the investor has the more of to say actually.
Okay.
Yeah. But then if it's like a debt fund and outsourced kind of stuff, what can you do?
Right. So just another follow-up question quickly then for you. Do you find enough companies that actually is reaching the bar when it comes to these sustainability-related issues? Do you find enough companies to put money into?
That's a nice question. You need to be selective with the kind of the data you use. In a sense that if you use kind of wrong data, then you probably end up with kind of crappy companies and, well, not kind of sustainable companies in the long run. So I think the data quality and the kind of comparability are the keys here.
Do you have some more?
Yeah, definitely. Well, I mean, moving from the investment side of things, well, in what you're measuring, is it mostly carbon that you're focused on in your assessments, or what exactly are you assessing? Is there water? Is there other types of pollution that you take into account?
Yeah, we got the climate change policy, and the carbon footprint is there, the measurement. Of course, you can debate about that, but that's one that's commonly used. So yeah, many investors use that. That kind of states the trend where you are. And then it's more like thinking which are the best in class, like not the lowest quartile. Very much the ones who actually have thought about like social and governance issues too.
That's great. Well, speaking of the social, I wanted to swing around here to Nordhuen and ask a question there, because looking at the portfolio that you have, it's not your typical portfolio. It's a very interesting portfolio in a very good way. And there's one of the companies there that I guess it says a lot about the rationale of impact and how you interpret it in Nordhuen. Can you tell us a bit about Just Arrived, I think they're called, and what they're doing? Because that's another aspect of impact that I think we miss a lot about. So can you enlighten us?
Yeah, absolutely. What Just Arrived is doing is very simple. They are a job app for newly arrived Swedes or refugees, and making it very efficient to place them into employment very, very efficiently. So that's one way to look at impact. But I just wanted to build on the question that you asked on the pipeline. So in terms of pipeline or the investment universe. So when we started Nordhuen, one of the questions that was on top of our minds was, are there enough of these companies? Are there enough impact tech companies? And now, 1 year later, we can say that there is plenty. We're absolutely overwhelmed by how many companies there are. But one interesting factor is that if I look at our portfolio, today we have invested in 7 companies, and we plan to invest in up to 30 more over the next 2 years. And out of those 7 companies, I can say that 90% of them don't think about themselves as social entrepreneurs. They simply think about themselves as entrepreneurs. And that really says a lot about the companies that we invest in, that they're not necessarily social entrepreneurs. They're entrepreneurs, ambitious, driven, but it happens that at the core of their business model, they're solving a problem, be it a societal problem or environmental problem, and we feel that that's in one way is the winning formula for our investment strategy.
Well, that's exactly the same as we notice. I mean, our companies are simply solving a huge problem, and it tends to be related to the environment. But just as you say, they are simply entrepreneurs trying to grow a business.
Well, then let's stay on the pipeline theme, because we do have Climate Kick here, and you know there's a lot of companies there that you're looking after or helping grow. I mean, it's an interesting kind of organisation, because you could say that everybody in the room here is a shareholder in Climate Kick as an accelerator with tax revenue and
because it's
whatnot.
EU money.
It's EU money, so that's cool. So everybody here is a shareholder in Climate Kick as well, so feel free to ask questions. But how do you measure the success or impact through Climate Kick? What are you thinking about to measure the success?
Well, obviously, we try to see ourselves as the best accelerator that can actually scout for and find the best clean tech, climate relevant startups. So we are present in 21 locations in 14 countries across Europe. So we have a wide reach, and we really have a very stringent selection process where climate impact is an important criteria. Then secondly, we measure our own success at capital or external investment attracted for the startups we support. And at the moment, we have a track record where 500 million euro has been attracted to the companies we've supported. So for every euro we spend, we attract 14 euros in external investments. Last year it was 16 euro. And this year we hope that our startups will reach a goal of attracting 150 million euro in external investments. And we're talking about very early stage startups, so we think this is a pretty good track record. And certainly on the CO2 impact or climate impact, we really try to both help the startups to, let's say, measure and tell their story, and we try to train them various self-assessment tools, etc. But measuring CO2 impact of a startup is actually a very difficult thing. So we are really torn between, should we provide very professional assessment consultants that should really go through the startup development, etc., or should we do light touch self-assessment of the climate impact? And at the moment we've chosen the latter, but we are certainly contemplating whether it should be much more stringent and professionalized.
Well, we've done the impact calculation. That was leading right into your question.
Well, we
I love it.
and I think in our case it was pretty straightforward. We looked at actually the so to say, verified savings that has occurred. So we looked at the companies that had a certain level of revenue. And I mean, that makes it easier. Not saying that it's straightforward in all companies, but I actually was wondering if there's a question from the audience. Is there anyone who wants to ask any of these ladies any question? Anyone wants to ask each other a question? Well, Joshua, do you have
I was
more?
going to encourage that. Like, I mean, looking at the work that each of you are doing, you all represent different parts of a spectrum in this kind of space. So I guess I'd love to hear about what you all think the impact rationale is for each. You know, how do you feel about the pension fund and their... I don't want to pick on the pension fund, by the way, but, you know, we're all trying to improve what's going on here. So, I mean... Is there any insights from the panel on how we can progress this faster and get to where we need to go?
How can we accelerate this? We've been trying to push our positive environmental impact out to a lot of people. We try to get our shareholders to calculate it themselves, and we try to simply market it and communicate it. What can we do to make it grow faster?
Well, maybe I can just say we hope that the startups that graduate from our accelerator will be well trained, well coached, well helped, so that the impact investors can also look at us as a rubber stamp of good quality, and then you can maybe take it further from there.
Yeah, I think it's an excellent question of how we can accelerate the change. I think everybody in this bar right now pretty much agrees on where we should be going as humanity, but I think it all boils down to what is driving the change and what is